Hello, everyone. I'm Rob Smith of the In the Black Quantidge VTF here at T3 Live with this week's market wrap up on what another awesome Fed day. Love Fed day. We got ourselves an outside day, and that's what we usually can expect, an outside bar when there's no news coming out during market hours or when they're open, and that's certainly what we got. A little expansion of the broadening formation. I'll get to that in a second. A lot of the stuff I've been tweeting, a lot of my concepts out so you can see them. And next week I'm going to be doing a webinar on Thursday. I hope you can join me for that, and we'll have a lab in September because one of these things I talk on Fridays this happens all the time, and so once you know how to trade the volatility, life becomes a lot better. So I tweet that out at Rob in the Black if you want to follow me there. I also do a more extensive weekend breakdown over the weekend. You can find that here at T3 or on my Twitter feed or at Smith in the Black, all one word on YouTube. But anyway, so one of the first things I do in the morning is I come in and I hit Twitter and I go hashtag mind the gap. And some of the traders will only trade those things because those are the things that are moving. And so today on that list was GameStop. And here, gap and go to the downside. And so we're just going to look for those equilibriums to get in there. It goes down, goes inside 15 right here. Breaks the equilibrium of the inside 15 and never comes back. We had TLND. TLND gaps down and comes back. And then you can see this consolidation area here. You can see this inside 15 here, rockets it back to take out those highs. This inside 15 called the short-term high. This momentum hammer called the follow-through on the gap. And if you say, this is a little bit too much, just go back to the 60s. It goes up, it goes 60, it goes 60, pulls back in, then makes that 60 equilibrium, which takes it right back to the highs. If you go to Spelunker, SPLK, this thing was beautiful right out the chute. You get your opening 5-minute here. Inside 5-minute, bam, right there. See you later. Never comes back. And for a little bit slower, you get the inside 60 right here. So equilibrium formed, bam, see ya. PSTG. And you can see this gap, and then this thing on the 5-minute chart was absolutely gorgeous. Inside 5 down, inside 5 down, inside 5 down, exhaust by taking all those things out. And there's ways to understand when these things are going to exhaust as well that I talk about every day. So maybe you want to stop by. Autodesk, gap and go, inside 30, up and up, go. Inside 30 here, up, inside 30 here, up, inside 30 here, up, never comes back. And that's what we like out of our gapper list. But then old Ulta Salon, oh yeah, oh yeah, Ulta, here, down, 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 inside 5. And this inside 5 broke at 258, and it bottomed out around 250 in there, and you had another fiver there. And there's we look for also is not just one of these inside bars, but combinations thereof of different types of things. And so when this 5 broke down here on a 3-minute basis, and I tweeted this picture out too, the reversal strat in the direction things are going here, and you'll see that inside bar and the shooting star, and I'll blow that up so you can see it. And this is an important pattern to know about. Here, inside bar goes to the upside, and then returns to go shooting star versus it. That's an equilibrium attempt to the upside failed. And when that failed, you have stops here, here, and here. And because it's going down on all time frames, we can expect that there's also natural sellers in the stock. It's a very important setup you want to know about no matter what you're trading, no matter what time frame. And so if we go to... Oh yes, and I was also asked a very interesting question because there's a way to get this thing on the long side as well, is... on the bottom here, went inside 15, back up right here, equilibrium formed. Now that means the sellers either got to come back or they're exhausted, and it's short covering in bottom picky time, and goes inside 15 and shoots way back up. And the question was posed to me, well, if it's down on all the day and the week and the month, how can we buy this here? And the fact is that time frame continuity will shrink. The importance will shrink the more volatility there is. And so if you take a look at today, you're going to see that the day has almost as much movement as a regular month. All right, almost as much as a regular month, and certainly more than a regular week. All right, and so at that time, that means things are really moving, which means that time frame continuity can go down from the monthly, daily, weekly 60 to 15. 15.531, something like that. And so, or even if you just use the 60, that 15, indeed, change that 60 back green right here for the intraday time frame continuity, the one inside 60 again. So there's a lot to do on that gapper list, and so I'd pay attention to that. So let's get back to the SPY. We talked about SPY last week being outside week, and we did it again. Outside week. So that we know that's a broadening formation. Let's go back and look at the 60 and what it did. And if you take a look at the 60, here it was last week, the higher high and the lower low. And we say triangle need to grow, and it goes inside. It takes out the highs, goes inside 60, peak, and then here comes down and takes out this line. So now we have a bigger triangle, and these will continue to grow as we've seen over time. It's a matter of watching the internals. So if we take a look at one of the things that's happened on the 60 here in the last few days, I've been tweeting out, and if you've been with me at all, you've heard me talk about these. It was very important on the 60-minute basis, reaching equilibriums on the futures. And so what we had yesterday was we had two today, but yesterday simultaneous break. And what that means is all the broader averages here go inside on the 60 and break in the same direction. Now, granted, there's not a lot of volatility, and so we don't always get the big move out of it, but it identifies which direction this market's going. So this time you had the SPY go down, you had the diamonds go down. Here you had the QQQ go down off of that and the small cap. And at that time, we knew the IBB stocks were in trouble. And so when that 60 broke, we had this on the IBB, but you had stuff like Amgen, here, boom, puke, ICPT. I mean, almost every one of them was in trouble and broke on that simultaneous break. Here, whew, see ya. So that's important stuff to know. And so when we look at this triangle is going to be getting bigger, volatility is going to grow. We got to take out one side of this thing, right? Here now you got an outside day, but this is the giant 60 up in here visualized on a daily. How are we going to get out? First of all, how are we going to get out of today? Which is it possible we go inside day on Monday, and then we're going to start a new month. So you'll see within the internals, the sectors, things have been actually contracting. And the SPY is just starting to expand 2 outside weeks. And so when the big move comes, you got to get outside of this. Either we go down and test this baby, or we can just go launching back to the highs. We want to look for these things that are consolidating now and then start coming back, start moving, breaking those equilibriums on either side of this to get this to expand. And so today, IBB, after what it's been doing, goes inside day. So it expanded this triangle here. It goes higher high, then lower low, now inside. Now what does it do? Does it go down sideways inside day and measured move of this and fall apart? Or does it pop back up and try and test the other side? If we go to crude oil, USO, and crude oil go inside weak. XLE goes inside weak. So you get the PXD. So these energies still haven't really picked a direction. And that's something we want to know about. And then coming into September, we got the transports inside month. So we got XLP, the defensive guys, inside month. So we want to see how that goes. And so, like I said, I'm going to elaborate a little bit more on the weekend video. But all these concepts are important to remember and important to see very clearly. And that's why when we have equilibrium in the futures, you're going to hear this with me, the triangle, because that means it's dinner time, baby. Come and get it. And it's obviously we had 3 of those simultaneous breaks that were real good. Let's go back and look at them here today. Simultaneous break 60. Right here, boom, and simultaneous break goes like that, and you had the QQQ inside 60, see you later, thank you, small cappers, the diamonds, and you even had time to reconfirm on these when you look at the SPY here. Goes inside on the 5 right here. So it breaks the 60, goes inside 5 here. I missed it. No, you didn't. Inside 5 again. Bam. So lots of opportunity every day if you know what you're doing, and that's why I'm here to help you figure it out. And then SPY even going to leave us with a little 5-minute triangle like this to finish off the day. And then it's important to learn about how the triangles become support and resistance because horizontal lines are incorrect. And if you take a look at this, because they don't enter time into it, and if you go back like this, you're going to see the old Brexit triangle, and it becomes support here, and it came support almost to the tick so far. But outside days, these triangles need to grow, and we're going to watch what the insides can do to expand that next week. All right, I'm Rob Smith of the In the Black Quant Edge VTF here at T3 Live with this week's Market Wrap-Up.